Welcome back, everyone. Today we are going to start with the new chapter. Yes, the chapter name is Financial Statement of Companies. It is very, very much important in your career. If you go for BCom, there will be obviously the chapter Financial Statements is there, and if you choose professionals, it is must chapter. Let us start with the balance sheet. So why we will prepare balance sheet? This balance sheet is the main source of information to the shareholders or other parties to identify the profitability of the company or the status of the company. What status? The financial status of the company. By understanding this, they will decide whether to invest in this company or to not. Okay, here you should have a full page. In off page we are gonna write equity and liability, and in the next off page we are gonna write assets. And you need full page, and we're gonna prepare in the next page notes to accounts. So why we will prepare notes to accounts? Why because if we calculate everything in the balance sheet will look like hell. That's why we prepare notes to accounts. Any calculation in the balance sheet related to the balance sheet we will do in the notes to accounts, and from here we will transfer it here. The balance sheet must be clean. That's the reason. Yes, let us start. The first thing in your balance sheet will be equities and liability, and second thing will be assets. Okay, equity and liability. In the equity and the liability, the first thing comes shareholders fund, the investors. Right, the investors will be the first. Shareholders fund. Under shareholders fund, it is first will be capital fund. The first is share capital. The second one, reserves and surplus. And third one, money received against share warrants. Let me say, let us prepare the notes to account with the hands. Right. You should write it down along with me. Okay. Okay. The first thing is share capital. Here we gonna write note number one. Note number one. Share capital. Share capital. Under share capital, we have authorized share capital. What do you mean by authorized share capital? Authorized share capitals are those, or we can say it means a company's maximum limit of issuing of shares. Let us say the company has authorized share capital of 50 lakh. To the max they can issue up to 50 lakh. And they cannot issue more than this. This is called authorized share capital. Next, this is, consider it as A. B, authorized share capital. After this, the company will issue the share capital. issue of share capital. You already know it in the chapter issue of share capital, right? See, third one, subscribed share capital. Subscribed share capital. What do you mean by subscribed share capital? If you are issuing the share capital, the public should purchase it, right? The purchase is called subscription. They are purchasing the shares. It is called subscription. Let us say you have issued 50,000 shares. 50,000 shares, out of that the public buyed 45,000 only. They are subscribed for 45,000 shares. It is called subscribed. And fully paid, paid up capital. What do you mean by fully paid up capital? Let us say you are issuing one debenture of rupees 100 each. The shareholder should pay entire 100 rupees. That is in your application, allotment, first call and final call. Everything, if he pays, it will become fully paid up capital. And next, subscribed share capital, but not fully paid, what it means, let us say the shareholder paid application money, allotment money, but not paid final call or first call money. He didn't paid, let's say 10, 50. He didn't pay the 50 rupees final call. It is called subscribed. He subscribed but not fully paid. It didn't pay full amount. In the full amount, that is called subscribed share capital but not fully paid. Then we will minus calls in arrears, and we will add forfeited shares. This is your first share capital. Did you understand this? Take down. Let us move on to second one, reserves and surplus. Right? Okay. Reserves and surplus. The B. Reserves. Sorry, note number 2. Reserves and surplus. What do you mean by reserves and surplus? Reserves and surplus means it's profit. Reserves means we keep some amount aside from the profit or from capital, wherever we will keep some amount. Under any reserve is there in the company, it will come in the reserves and surplus itself. In the reserves and surplus, first thing will be general reserve. Second, we can say debenture redemption reserve. Third one, capital reserve. And most P&L balance. It may be negative or positive, comes here. If it is negative, we show it in the negative. If it is positive, we will add it to the reserves and surplus. That's it. The third note is money received against share warrant. It is not relevant as per your examination. It is not relevant. And the non-current liability, the first thing is long-term borrowings. Long-term term borrowings. Long term borrowings means whatever we have taken the loan will be paid in the future years, that is not in the we will pay in the current year also, and include previous next year and next year we will pay. So that is long term borrowings. We can take example as a bank loan or debenture. Bank loan or debenture. Then what we have, deferred tax liability, it's not relevant and we are not discussing. Other long term liability, other long term liability, other long term liability, other long term liability. Let us say it comes premium on redemption of, here premium on redemption of debenture, premium on redemption of debentures. Apart from bank loans, debentures, apart from bank loans, debentures, if there is any other long term liability, will come in the other long term liability in the note 4. Premium on redemption, we can take it as example. And next, long term provisions. Next, long term provisions. What do you mean by long term provisions? Let me explain. Long term provisions, these are the amount the company will keep aside, some profit they will keep aside for the future liabilities. What are the future liabilities? It you can take example for employee benefit expenses. For the employee benefit expenses, employee benefit expenses, what are those? Let's say the company will pay gratuity, pension, provident fund. In these are the examples for the long term provisions. They will keep aside some profit for these. Next, current liability. Shall I erase it? Yes. In the current asset, the first we have short term borrowings. The sixth note is short term borrowings. What are short term borrowings? Short term borrowings are or will be paid in the current year itself. Will be paid in the current year itself. Let's say bank overdraft, BOD, or short term loans. Short term loans. And the next trade payable. Trade payable. Seventh note, right? Trade payable. Under trade payable, we may take creditors and bills payable. These are the current assets. Within a year, we will pay that. And next is other current liabilities. Next, other current liabilities. If the liability doesn't fit in above category, will come under other current liability. For example, outstanding expenses, it is a liability, and prepaid income. Right, these are some examples for the other current liability. And the next, short term provisions. We saw long term provisions. What do you mean by short term provisions? Note number 9, short term provisions. Short term provisions. Right, short term provisions are the same as long term provision. the company will keep some amount aside from the profit and for provision of dividend. It is called they will use this fund for the payment of dividend or for the payment of tax. They will create a provision account, provision of dividend, dividend, and provision for tax, provision for tax. Yes, the liability is over, you can take it down. Shall we move on to assets? Shall we move on to assets? Let us start with the assets. Let us start with the assets. The first thing in the asset side is non-current assets. Non-current asset means, what do you mean by non-current assets? Non-current assets are those which gives us benefit, in the future years, Under non-current assets, we have fixed assets. Fixed assets. The fixed asset, the first thing is tangible asset. Tangible asset. Note number 10. Under tangible assets, we have building, which can touch and feel. Building, machinery. The note number 11, intangible assets. Intangible assets. Intangible assets are like we cannot touch and feel it. Patent, copyright, goodwill. Right. And the next, non-current investments. Non-current investment. What are non-current investments? The investments are made for the long period. Let's say 3 years, 4 years, 5 years, 10 years. For like that, we will make investments. Right, that is called non-current investments. Long-term loans and advances. Long-term loans and advances. The 12th note, long-term loans and advances. These are security deposits. Can take security deposits as example. Okay, next, the note number 13 is other non-current assets. Other non-current asset. Other non-current asset, we can take example of discount on issue of debentures. We show it in the current non-current asset, right? Other non-current asset. Yes, then current assets. Note number 14, we can write as current assets means which the benefit of the asset will receive only in the current year. Current investment, which will sell in the current year itself. Inventories. Note number 14, inventories. Inventories like raw material, and work in progress, finished goods. These are the examples for the inventories. The next, trade receivable. Note number trade receivable 15. Trade receivable. Trade receivable, how much? Okay, what it is? Trade receivables, we can take examples of debtors, bills receivable. Right, then the 16th note, cash and cash equivalent. Cash and cash equivalent. We can take bank balance, cash balance, bank and cash. Next, short term loans and advances, which is not more relevant, but we can note it down. Short term loans and advances. 17 note short term loans and advances. So what do you mean by short term loans and advances? We can take examples of advance tax. If we pay advance tax, we will show it in the short term loans and advances. Advance tax or prepaid expenses. Prepaid expenses, it comes our asset. Other current assets. Other current assets. Note number 18. Other current asset. We will see this point in the question. You will understand there better. Okay, take this down and let's start with the question. Let's start with the question. Question 1, solution. The question is on the board. You can write it down the question. So let us read the question first. And one more thing, whatever sequence there is in the balance sheet, we should maintain that sequence in solution also. Right, one by one, whatever it is, we should maintain that. Yes, did you understand? Yes, let us read the question. Dinkar Limited has an authorized capital of rupees 50 lakh. Authorized capital means the company maximum can issue this much of shares. Okay, divided into equity shares of rupees 100. Okay, the company invited applications for 40,000 shares. They are invited means issued 40,000 shares. Applications for 36,000 shares were received. The public applied for 36,000 shares. Okay, all calls were made and duly received except for 500 shares on which the final call of rupees 20 was not received. Means 80 rupees received, 20 rupees not received. The company forfeited 200 shares on which final call was not received. Okay, they are forfeiting 200 shares. Fine. Show how share capital will appear in the balance sheet of the company. Also prepare notes to accounts. Here they've asked only one thing is there, the share capital. Share capital. The first one, equity and liability. Equity and liability. Under equity and liability, we have shareholders fund. Shareholders fund. Under shareholders fund, share capital. We should calculate this only. In the notes to accounts, okay, let us calculate share capital. Share capital. In the first, let me take the question. In the first, they have authorized capital of 50 lakh. Okay, authorized capital. Authorized capital 50,000 divided into equity shares of rupees 100. 50 lakh, let me calculate somewhere here. Let me calculate here itself. They have 50 lakh divided into equity shares of rupees 100. Divided by 100, it will be 50,000 equity shares. 50,000 equity shares. That is 50,000 equity shares of rupees 100 each. It comes out 50 lakhs. 50 lakhs. Right. We have authorized capital of 50 lakhs. Then issued capital. Issued capital. How much? They have issued 40,000 shares. They have issued 40,000 equity share. Right. They have issued application money. The application received for 36,000. Okay. Of rupees 100 each. Right. 100 means 40 lakh. 40 lakh. Then subscribed and fully paid up capital. Fully paid up capital. Shall we calculate? The public subscribed for the public. Here we will calculate. Public subscribed for 36,000 shares. Out of that, all calls were made and duly received except 500 shares. Except 500 shares means fully subscribed is 35,500 into 100. Is that correct? Yes. Fully subscribed 35,500 into 100. 35 lakh 550,000. 35 lakh 50,000. Is that correct? Yes. Subscribed but not fully paid up capital. Subscribed but not fully paid up capital. Yes. How much it is? First, 300 debentures means 200 they are forfeiting, remaining 300 into 100, it is 30,000 rupees. And out of that calls in arrears how much it is? 20 rupees per share into 300 means it comes to, is my calculation, 20 into 300. Okay, 6,000 it comes out. Total 24,000 remaining is there, and we will add forfeited shares. How much? 200 we are forfeiting. Out of how much we have received? 80 rupees we have received, because 20 is arrears. Right. 200 into T, I think 16,000. Total 40,000 in the outer column. 40,000 in the outer column. This is your notes to accounts. So, shall we calculate how much it comes out? 35 lakh 50,000 plus 40,000. 35 lakh 90,000. 35 lakh 90,000. 35 lakh 90,000 is the share capital. 35 lakh 90,000. Yes, the first question is done. You can take it down. Can take down the solution. Yes, pause the video and take down. Yes. Shall we go for the question number 2? Yes. Shall we go for the question number 2? The question is on board. You can take down the question. Let us read the question first. Yes. Show the following items in the balance sheet of Amba Limited as on 31st March 2017. 8% debentures They have debentures 10 lakh, equity share capital 50 lakh, security premium 20,000, preliminary expenses 40,000. What is the preliminary expense? What do you mean by preliminary expenses? The expenses happens in the at the time of incorporation of company. At the time of incorporation of the company, whatever expenses happens, this is called, that is called preliminary expenses, and it will be get minused in the security premium first, and still if it is there any balance, that balance will be reduced from the P&L account. If nothing is given in the about surplus, means P&L or security premium, we will show it in the other current assets, other non-current assets. Okay. Right, then we have statement of P&L. Discount on issue of 8% debentures, discount on issue of 8% debentures, loose tools, bank balance, cash in hand. Shall we do this question? Yes. Start with the notes to accounts. Shall we start with the notes to accounts? Yes. They've given first 8% debentures. Next we will do, first we will calculate reserves and surplus. We will calculate reserves and surplus. Note number 1. Reserves and surplus. Reserves and surplus. What they have given, security premium. The first thing is security premium. How much they have given? 20,000. And the next, less preliminary expenses. We should have double column, 20,000. Here we have one more column. Okay. Yes, preliminary expenses. How much they have given? 40,000 they have given. Okay, 20 minus 20,000 in the outer column. Next, we have statement of P&L. Statement of profit or loss account. Profit or loss account. How much they have given? 1,50,000, and 1,50,000 minus 20,000, 1,30,000 in the outer column. Yes, next what they have given? 8% debentures. We will show it in the non-current liability. Under non-current liability, we show it as long-term borrowings. Long-term borrowings. It is how much? 8% debentures, 10 lakh. We can take it there. Still, notes to accounts. Okay. And then what they have given? Statement of P&L. Next, discount on issue of debenture. Discount on issue of debenture. Yes, other liabilities done. In the asset, non-current asset. Non-current asset. In the non-current asset, discount on issue of debenture. Right, if you read that question, discount on issue of debentures, the discount, whatever the loss occurred, we should write it off in the 4 equal installment, and in the 4 years. How will we do? If they have given 40,000 divided by 10, sorry, 4 years. Okay, per year it becomes 10,000, right? In the current year, in the current year we should write off 10,000, remaining amount 30,000 comes here, and the 10,000 goes to the other current liability. We'll write it down. Next, loose tools, and next is current asset. Fourth note is current asset. Fourth note is current asset. We have inventories, loose tools. How much? You can show it here. 20,000. And next we have cash and cash equivalent. We have bank and cash also, both 60 and 38. 60,000 and 38,000. And okay, shall we do one more thing? Is there other current asset is pending? We will do that straight away in the balance sheet itself. Balance sheet, whatever we write it down, the heading balance sheet Amba Limited, balance sheet as at March 31st 2017. You write it down. Shall we start? Yes, share capital. Share capital is how much? Here they have given share capital 50 lakh. Right, they have given 50 lakh. Next we have reserves and surplus. Next we have reserves and surplus. Right, reserves and surplus how much? 1 lakh, 1 lakh 30,000, 1 lakh 30,000. And next, non-current liability. We have non-current liability. Non-current liability, how much it is? 10 lakh. Non-current liability, 8% debentures. Long-term borrowing. Long-term borrowing under it, 8% debenture. How much? How much? 1 lakh 30,000. 1 lakh 30,000. And next, non-current asset. Assets. Non-current asset. Non-current asset. Discount on issue of debenture. Non-current asset we will show directly because space is less. 30,000, right? And next we have current asset. We have current asset. Under current asset we have inventory, and we have cash and cash equivalent. Cash and cash equivalent. And next we have other current assets. Other current assets. Other current assets. How much? 30,000. Inventories we have 20,000, right? Inventories 20,000. And cash and cash equivalent total 98,000. And we have other current asset, whatever the balance 10,000 is there, we will write it here. Yes, the question is done. The question is done. You can note it down. You can note it down. Shall we move for the question number 3? The question number 3 is on the board. It is very simple, a small one. Let us do that. Shall we read the question? From the following shown in the balance sheet. Okay, particulars. General reserve we have 5 lakh. General reserve we have 5 lakh. Note number 1, reserves and surplus. Reserves and surplus. We have general reserve. We have general reserve. How much? 5 lakh. Right. Okay. Statement of P&L. Statement of P&L. We have loss. Statement of profit and loss. SOPL. Debit balance. Debit balance we have, that is rupees 3 lakh. Outer column 2 lakh rupees. Outer column 2 lakh rupees. In the shareholders fund, reserves and surplus. Reserves and surplus. Reserves and surplus. How much will show? 2 lakh. That's it. The question number 3 is done. Let's move for the question number 4 on the board. The same question, but in the reserves and surplus in the balance sheet will show a negative balance of 3 lakh. That's it. 5 lakh general reserve and statement SOPL is 8 lakh. Remaining 3 lakh, again it comes out debit balance, right? No, it comes out loss. We'll show it in the negative in the reserves and surplus. That's it. The fourth question is done. On the fifth, Arushi Limited issued 5,000 debentures. Shall we do this? Yes. The fifth question is on the board. You can take down the question. Let's read. Arushi Limited issued 5,000 10% debentures of rupees 100 each at par, but redeemable at premium of 5% after 5 years. Give journal entries and also prepare the balance sheet of the company. Ask for the balance sheet and journal entry also. Right. Shall we do the journal entry first? We'll do it here. First entry will be bank account debit to debenture application and allotment account. The first entry will be this only. How much? 5,000 debentures into 100 each, 5 lakh. 5 lakh. 5 lakh. And the second entry, debenture application and allotment account debit, and we have premium redemption redeemable at premium, loss on redemption of debenture debit to debenture account, and to premium on redemption of debenture. You have done these in the debenture chapter, right? Redemption, issue and redemption of debenture. How much? It is 5 lakh, and 5% loss means 25,000 out of 25k, and we will transfer debenture account to debenture 5 lakh, and premium is 25k. The entry is done. Shall we do the notes to accounts? Yes. What they have given in the first they have issued. Okay, fine. Only they have asked about debentures. The first note will be long term borrowings. Under long term borrowings, they have issued 5,000 debentures of rupees 100 each. 5,000 debentures of rupees 100 each. Is that right? Comes out 5 lakh. Is that correct? Comes out 5 lakh. And then we have done entries right here only. Loss on redemption of debenture, where we will show it under non current liability. We show it as loss on redemption of debenture. Loss on redemption of debenture. Loss on redemption of debenture, how much? 25k. And in the assets, show it is non current asset. and the whatever loss we have taken, we should equally write off it. 25,000 divided by 5 years, right? 25k divided by 5 years means per year it is 5,000. Per year it is 5,000. This 5,000 we show it in the other current asset, remaining 20,000 in the non-current asset. Remaining 20,000 in the non-current asset, and cash and cash equivalent. We have 5 lakh rupees. We have 5 lakh rupees in the bank. Sorry, we show it in the bank. We have 5 lakh. Okay. Then what we have, and remaining other current asset. Other current asset. Under other current asset, we show 5,000, right? 5,000. Note number 1, 2, this is 3, this is 4, this is 5th note. The shareholders fund, nothing. Okay. In the non-current liability, second one, non-current liability, long term borrowings. Long term borrowings. Under long term borrowings, how much? 5 lakh. Then what we have, non-current liability. Under non-current liability, we show it as loss on redemption of debenture. How much? 25,000. And next, asset. In the asset, first is non-current asset. Under non-current asset, how much we will show? Non-current asset, we show 20,000. We show 20,000. We should write description right here. Loss on issue of debenture. Sorry. Yeah, loss on issue. 20,000 we show it here. And second one is cash and cash equivalent. Cash and cash equivalent, how much it is? Cash and cash equivalent, how much we have received? 5 lakh. And the third, other current asset, we show 5,000, which is related to the current year write-off. Yes, the question 5 is done. You can take down this. Yes, now we are going to talk about statement of profit and loss account. Statement of profit and loss account. Before that, we have one question. On the balance sheet, regarding balance sheet. The question is on the board. We can take down the question. Yes. Shall we read the question? Just we will discuss about this question. Right. From the given particulars of Shine and Bright Company Limited, as at March 31st, 2017, prepare balance sheet in accordance to the Schedule 3. It's your homework, but we will discuss the question here. The first thing, they didn't give any security premium or reserves and surplus in the question. So, if they didn't give reserves and surplus, then what we will do, the first one, preliminary expenses, because we were minusing that in the security premium, right? So what we will do that, we will show it in the non-current asset, in the other non-current asset, right? Okay. And the second one, discount on issue of shares, non-current asset. And 10% debenture, it will be in the long term borrowings, stock in trade, inventories, cash and bank, cash at bank, cash and cash equivalents, bills receivable, trade receivable, goodwill, intangible asset, loose tools, inventories, motor vehicle, fixed asset in that tangible asset, and a provision for tax. We create a short term provision, right? It's a liability. Okay, that's the question done. You can do the question, it's easy one. Okay, shall we move on to profit and loss account? Let's see how it goes. Yes, I got some little bit of cold. Yeah, revenue from operation. The first thing will be revenue from operation. It means sales. It means sales, that to net sales. What do you mean by net sales? Sales minus sales return will be the net sales. Is that correct? Yes. And next, the second one, other income. Other income. What is other incomes? We can take it as dividend income or interest income, right? There are so many of other incomes. As of now, we'll take these two, right? If we add these both incomes, we get total income. This is for current year and this is for previous year. Then what we have, expenses. Fourth one is expenses. Under expenses we have first one, cost of material consumed. Cost of material consumed, what it means? It means basically cost of goods sold. I think you have learned it in the first PU. Let it be. Cost of material consumed, we have a formula. Opening inventories plus net purchase. Net purchase means purchase minus purchase return will be the net purchase, less closing inventory, comes out cost of material consumed. And the next one, purchase of stock in trade. Let's say you're doing a real estate business. If you're purchasing buildings, it will be your stock in trade, right? Purchase of stock in trade. If you purchase any stock in trade, that will come under here. And change in inventories. We have formula: opening inventory minus closing inventory will be your change in inventory, right? We have three types of inventories. It may be raw material, it may be work in progress, finished good. Raw material means just you have purchased that, nothing else, you didn't do any work on that, just you kept that raw material. Work in progress, whatever raw material is there, you put into the work, it is in work in progress, not yet finished. If it finishes, it will be finished goods, right? And next, the next one, employee benefit expenses. We can say salary, wages, pension, gratuity, whatever it may be, anything which is related to the employees, it will come under employee benefit expenses. Finance cost. In the finance cost, basically we show interest and borrowing cost. Interest on bank loans or borrowing cost, we show it in the finance cost. Depreciation and amortization. Depreciation we charge for tangible assets and amortization for intangible assets. Then we have other expenses. Other expenses means it may be bad debts, rent, freight, discount. There are n number of other expenses, we can show it here. Next we gonna total it. The fourth one, expenses, total expenses comes here. And next will be profit before tax. Profit before tax, A plus B. This is your, the first one is A and second one is B, and third one where it went, ah, C. A plus B, other incomes minus expenses, or we can say total expenses, we can take C, total expenses, right? It comes out profit before tax. In that, if we let me write, if we less tax, if we less tax, profit after tax will come out. Yes. Shall we do a question on this? Shall we do a question on this? Yeah. Shall we do? Yes. Let me erase the amount columns so that I can use this only. If not, I should do again. Right? Yeah. The question is on the board. The question is on the board. You can take down the question. You can take down the question. Okay. Keep it here. Yeah. Let us read the question. From the following particulars, prepare statement of P&L for the year ended March 2017. First one, they have given about plant and machinery. It goes to the balance sheet. Land, it goes to the balance sheet, not relevant to the P&L. Depreciation on plant and machinery. Depreciation on plant and machinery. Where we will show where it went. Depreciation and amortization. Yes, they have given 16,000. 16,000. Right. Next, purchase. Purchase, where we will show in the cost of material consumed. They have minus everything. It is given as adjusted rupees 4 lakh. Rupees 4 lakh. Then closing stock, balance sheet, wages and salary. Wages, they have given sales net. How much they have given? 10 lakh. After that, wages and salary they have given, where it went, employee benefit expenses. How much? If we both add the both, 2 lakh, it comes out 2 lakh. 1,20,000 plus, let me write, 1,20,000 plus 80k. That's it. Next, bank overdraft will go to the balance sheet. 10% debentures issued on 1st April. Okay. And 10% debentures, we should pay 10% interest, right? On 1 lakh, it will be 10,000 on the finance cost. 10,000. How it comes? You should write it here, the calculations, or in the outer column in the notes to accounts you should take. Just I'm writing here, 1 lakh into 10% is 10,000. Next, what they have given? Equity share capital. Okay, that's it. The question is done. 4 lakh, 6 lakh. Okay, 6, 4, 390, 380, 374. 374 before tax. 374. 3,74,000. That's the question is done. You can take it down. We'll move on to the next chapter. Until then, bye.